Hello and welcome to the FinTech Finance Virtual Arena. I'm your host, Doug Mackenzie, and on today's episode, we've got a very special session because we're actually going to be looking at the trading industry, looking at all the technology and innovations, and really how the industry has changed over the last couple of years. And joining me today, I have two specialists right at the heart of the industry. I have Milan Dvořák from Netcope and Ashok Kalyanswamy from Saxo Bank. Guys, thank you so much for joining us here today. It's a subject material that I'm not particularly, very up to date with, but I'm so excited to kind of hear your guys' perspective and really hear how the industry is changing. So with that in mind, could I kick off and ask Milan, how are you doing here today?
Hi, I'm doing great. How are you?
Very well, very well. The sun is shining here today on this lovely day here in the UK. But Milan, before we go any further, could I actually get you to introduce Netcope to our audience that might not have heard of you guys before?
Sure. So our company right now is called Netcope Technologies, though we will soon be called Magmio. We are in the rebranding process right now. I started at the company about 10 years ago. And since the beginning, we were focused on Fpga technology and building ultra-low latency tick-to-trade systems, which are targeted at clients who don't have internal Fpga experience.
Incredible. Now, that is definitely one of the technologies I've noticed from my notes that is going to play such a significant role going forward in the trading industry. So I'm really excited to hear that kind of tech side of things from yourself, Milan. Thank you. And also Ashok, thank you so much for joining as well. How are you doing?
I'm doing fine, thank you very much.
Amazing.
And I joined Saxo Bank about 4.5 years back. I run all of technology for Saxo Bank, and for those of you who don't know Saxo Bank, we are a global facilitator in trading and investment. So we connect to 88 markets around the globe, and in pretty much 25 plus countries. We are regulated, and we are a facilitator catering to traders and investors. So that's our business. And before that, I was at Lehman Brothers from '99 through the bankruptcy, Barclays, Nomura. And really in the midst of all electronic trading and building out the electronic trading tech out there, then at Macquarie and now at Saxo.
Well, Ashok, thank you so much for coming on the show. I'm so excited, to also hear that global expertise that I think Saxo Bank can bring to this discussion, but also that kind of seeing how the industry has changed over those tumultuous years is so exciting. So thank you for joining the session. Now, before we dive into where the industry is going, I've got to come to you, Ashok, first and ask, what was the hardware like when you first started in the trading industry?
Right. I mean, it was amazing. It was really a lot on Unix, right? And I remember actually way before Microsoft and Windows such a desktop and remote terminals, we just had like Sun Spark stations at a desktop. And we were using VI, Emacs, and what maybe now ancient tool, but really hardcore Unix, Linux operating systems for trading.
Incredible. Now, Milan, how does that compare to you? What was it the industry like when you first really entered from your side?
I think it was a lot different. It was about 10 years ago for me. Back then, the technology was already quite advanced, I would say. The standard was using low latency NICs like Solarflare or Exablaze and companies like this, and kernel bypass. Everybody, or mostly everybody, was still trading in software, and many people didn't know about FPGAs and hardware acceleration yet, or they didn't really understand it.
Yeah.
There were some companies that are already using FPGAs, but they kept really hard to keep it a secret. So it was a weird era to enter the industry because some people were skeptical because it was a new thing and they weren't sure whether it will work or not. And some were quite paranoid, like almost afraid to ask questions and not, tell you tell you too much. So, that's very different compared
seeing
to
the contrast there. Yeah. Well,
because,
I mean, with that in mind, then obviously it's interesting to hear people being unsure about hardware. I kind of want to explore that notion for a bit, because there's always, like the famous quote is from Alan Sugar, a businessman in the UK, is you'd never be able to sell off the back of software. So I'm really interested to kind of explore what that was, field programmable gate arrays, was it FPGAs, and what are the opportunities that FPGAs can really bring to trading at ultra low latency speeds, because obviously the tech required for that is so extreme.
So I'm not sure, it's not what it will bring to the industry. I think it already brought, and that's the ultra low latency and the famous race to zero. The thing about FPGA, the field programmable gate arrays, is that they can be, by programming them, you are basically creating a tailored solution to a very specific use case. And in trading, use case is usually ultra low latency. So there is no operating system, there is no overhead. There are just pure logic programmed to do one thing, and that's trading. That's why this technology can achieve, great performance and great latency, beating the standard software solution by a long shot. But at the same time, it's still programmable, so you can change it on a daily basis. You can upload new strategies. You can adjust your logic, every day, so you're not stuck with an expensive piece of hardware, that can get outdated or not functioning anymore. So it's kind of, putting best of the both two worlds together, like ultra high performance and programmability and flexibility.
Well, I think that's absolutely incredible. And Ashok, can I come to you as well and get your perspective on the opportunities that FPGAs, as Milan said, have brought really to ultra low latency trading?
Yeah, absolutely. And to Milan's point, is actually removing the layers between the logic you need to perform and the raw hardware. And at one of my past companies, in circa 2009, we experimented with different hardware-based solutions. And I think from a broker perspective, as opposed to a vendor perspective, we did go with FPGA. We programmed logic into that. We had them co-located at the exchanges. We got raw market data in and achieved really ultra low latency. At that time, of course, it was expensive, right? It was definitely expensive to put the significant amount of hardware and co-locate and raw market data. But that has prevailed, and it has been industrialized, and there are a lot more people offering that kind of a hardware-based solution for ultra-low latency trading.
Yeah. Now, with that in mind, then, Milan, Ashok brought up obviously the fact in 2009 it was pretty expensive. Can I ask, what are the current challenges with implementing FPGA hardware for ultra-low latency trading?
Sure. So, when talking to our clients or prospects, we usually see two main challenges. One is time, that if you're starting from scratch, it will probably take you a long time to make something up and running on an FPGA hardware, starting from scratch. And the other difficulty is finding the right people to do the job, because there aren't many hardware designers or FPGA engineers around, and if they are probably already working for your competition. So if you're starting, it can be quite tough, and it's a classic build versus buy equation. You can decide to build, which probably means 2+ years spent in development and big upfront cost because you need to hire the people, you need to buy the hardware, or you can choose to work with an existing vendor, really decrease your time to market and have a better cost control, but some kind of dependency on the vendor. So
Interesting. Now, with that in mind, then, hearing those changes and the situation that we're in with it, while also hearing about some of those opportunities that you've both brought up from the technology. I know, Ashok, you brought up, as obviously you experimented it in 2009. But Ashok, can I ask, and I really want to hear Saxo's perspective on this as being such a global industry leader. Now, I think it's fair to say that the trading industry has gone through a huge state of flux. And would you say that FPGA technology can actually help high growth or even emerging markets leapfrog the traditional markets that we're seeing now when it comes to the trading industry?
Yeah, it depends, right? And you have to think long and hard. So for strategies which rely on ultra low latency, right, which is not all. If you have a strategy and the key to your strategy is ultra low latency, yeah, for sure, right? And then you co-locate your strategy as close to the exchange as possible on kit where there's very little overhead, and you can get raw market data and trade directly.
Yeah.
However, then you also have to think about what you're solving for. If you have a proprietary algorithm which you're trying to use ultra low latency, absolutely, and that technology is being commoditized. However, if you're catering for a retail investor who's just trading, Apple or trading some mutual funds, or depending upon what you're doing, and if you're in Australia and you're trading with a broker on NASDAQ, you can put it doesn't really make sense just to optimize the last mile, because you're getting the order from a client, and it's there are many hops in the whole puzzle from a person making the decision to trade and the actual order hitting the market, right? When you talk about ultra low latency trading to optimize the hardware, the decision making has to be co-located, right? Your algorithms and your strategies have to be co-located along with the connectivity part. Otherwise, when you think of end-to-end, who's making the decision to hit a button to trade, where the market is, and then you do many other things, right? Whether it's networks or routing to optimize and hit the price you see. It's all about hitting the price you see as quickly as possible and reacting to the next step. So it depends upon the use cases, and the use cases are very large and varied. And it's not that important for the business we are in, because we cater to a large retail market and professional traders, but they're all over the world using a platform, and we are a facilitator.
Interesting. Now, with that in mind, then, it's interesting that you've brought up that kind of the different needs between different organizations, whether they be retail focused or actual professional traders, right, and investment bankers. And I think that's really where the technology comes into play. Now, with that in mind, then, Milan, what is the impact of ultra low latency on retail trading and high frequency trading? Are we going? Sorry, if I can direct that at you, Ashok. I'm going to come to you and say, if we look at ultra low latency trading, will it eventually have an impact on retail trading?
I don't think immediately, no. Right? Okay. Unless it's for the retail trader, unless they give away the discretion to trade to a prop shop, or if somebody is managing the asset for them and making the decision for them. But if a retail person, if you're sitting in the UK and you're trying to trade Japan market, is it going to make the nanosecond latency difference? Not really, right? By the time from your app or your desktop, you hit the button and it traverses to your broker and then to the market, those latencies are bigger than the actual last mile in the FPGA. So I would say, generally speaking, retail no. Prop trading, right, where you are having your own proprietary strategies, and if your firm does have proprietary strategies, and your strategies are going to be dependent upon reacting to the market quickly, then yes.
Interesting. Now, speaking of that change and kind of making sure those milliseconds count, we keep touching on that kind of race to zero, I want to say. So Milan, can you tell us a bit more about this race to zero to be the fastest? Now, as Ashok was saying, it doesn't really matter if you're someone in the UK and you're going to be trading in the Japanese market. That millisecond doesn't matter. That picosecond doesn't matter. But does this mean that fintech organizations that are looking to implement, for instance, FPGA technology can actually leapfrog the traditional institutions by putting in this new scalable technology?
So I guess it depends on the way you look at it. From some point of view, it already happened. Prop traders are, usually marginally faster than the classic institutions and banks and so on, just because of the size and regulations and maybe risk aversion. But as Ashok said, it really depends on your use case. So that might not really be a bad thing. Prop traders are doing what they are doing. They are faster, more agile than banks. But banks have other things they can bring to the table. So there can be a balance. And banks would probably use FPGA for different things than prop traders. Prop traders, I would assume it's usually the pick-to-trade systems, the co-located decision making, as Ashok mentioned. With banks, brokers, and large institutions, it may be more like using FPGAs as your risk gateway or market data processing gateway, especially during volatile times, and the year with COVID has showed us the data rates can vary a lot, and many of these institutions run into other performance limitations than latency, just dealing with the sheer amount of data. That's another area when FPGAs can help, low latency and deterministic latency even on the very, very high loads. So I think these are just two different things. Both type of companies are using technology for slightly different things.
I think that's interesting, and it seems to be something that is reoccurring in this conversation, is the fact that the technology is changing, but the way that these institutions, or these large institutions, large banks, compared to kind of prop traders, that kind of balance has stayed the same. And sometimes this technology, various technologies can enable that kind of balance, and sometimes there's just a genuine have to get down to the race to zero. Now, Ashok, with that in mind, then, when it comes to an organization like Saxo Bank, what are the difficulties when it comes to keeping up with the race to zero? Do you find that need, or at least you have to embark on that journey?
No, that's not. We are not in that business. We are not in the game. However, we always try to get the best price all the time to the customer and react to the customer's orders and what they're trying to do as quickly as possible. So we actually look at the whole value chain from different endpoints around the world to the network they connect to, the latency we have in our infrastructure to out. So we look at we have a more systems approach to latency as opposed to optimizing the last mile and making sure there are no inefficiencies in our pipeline to the market. Or sending distributing market data, but we are not into the speed business. So
no, but exactly, and I think that that a lot of institutions like Saxo Bank can say that it's all about kind of trying to be the best, but looking at it in a realistic way to kind of the whole value chain and improving where you can. Otherwise, the jump would be too much. Now, Milan, I'm also really excited. When we're looking at the technology side of things, I imagine Netcope works with some organizations that really are trying to get down to that the quickest speed possible. What difficulties do those organizations encounter when trying to keep up with the race to zero?
I think the biggest challenge is that it never ends. It's a continuous effort, continuous investment. You can say that the competition never sleeps. So on one hand, it's always fun. There are always new challenges, always new things to try. Always you can try to push the barrier a little bit a little bit further, but it can get tiring.
Yeah.
It's actually one of our core values, building a long-term relationship with our clients, because we understand it's not a one-time thing. We need to keep working on it and establish long-term partnerships in order to make this work in the long term.
Well, yeah, because I can imagine for those organizations in that part of the trading industry, it's not just the competition never sleeps, the technology never sleeps. It keeps on advancing. So, I mean, from Ashok, your side, the fact that you have to always kind of keep the whole part of the value chain improving, and then Milan, some of the people that you work with, just always having to remain the fastest. I mean, that just sounds absolutely incredible. And it seems like the trading industry really is moving in that general direction, but in different ways, and that's really exciting to hear. Now, Ashok, what are your predictions for the future of the trading industry? We've been talking about the kind of technology, the heart of it, and how that's changing, but I'm interested to see in a more kind of holistic term where you see the future of trading industry.
The future of trading, I think, is if you keep the technology aside, what traders are trying to do is execute strategy and have many different parameters in order to execute, right? So if you have a more holistic approach, right, what we want to give traders is timely and relevant information, right? That's of course how the markets are doing and what information is coming, but what's happening related to things they're interested in, like are there news events, are there earnings, or what, understand our traders, understand what the strategy is, and help give them information to help them trade. And that's not just market data, that's news. That could be information in Twitter, it's earnings, so that they have a holistic view, and then they can use that information to make trading decisions. And then, when they want to make trading decisions, we want to give them all the sophisticated tools so that they can send the orders as quickly as possible. And more importantly, we are very focused on risk managing, right? So we want to give traders risk management tools so that they can manage the portfolio, manage the risk, and have a real-time view of what the risk is, so that they don't lose the shirt, they don't lose the money, and we give them tools for stop loss. Or anyway, we are all into the business of information and risk. So combine information to make sound decision and risk management so that you can really manage your portfolio. Those are the things we are focused on from a holistic perspective, which are really critical to trading and successful trading and making money.
Yeah. Now, I think you've kind of covered really what we've been discussing there. The whole point is finding that balance, and I think that's going to be so critical. You have to find that the balance between innovation and also what a customer wants, because there's no point innovating for the sake of innovation.
Right.
Now, Milan, I'm also interested in your predictions for the future of the trading industry too.
I really like what Ashok was saying. What I was hearing is that basically you need to get smart, you need more data, you need more information, you need to make more educated decisions. And I think that also means that you need better technology to handle all of that, because our brains are growing faster at that rate. So we need some kind of help. So that's what we see as our prediction, and maybe also a challenge for the future. Looking for the balance between smart and fast. Even the FPGAs themselves are getting more capable. So it's fair to expect that people will want to do more with the FPGAs. So that's where we come in, to help reducing the complexity about using and programming the FPGAs, because there's a scalability issue there as well. So you need to smarter ways to program your strategies and adjust your strategies on a daily basis just to be able to keep up. So that's what we've been seeing recently from some of the companies.
Interesting. Now, I'm really excited to kind of imagine how you guys are going to go forward and find that. I mean, Milan, for instance, as we were talking, you guys have to consistently work with the never-ending change to technology at such rapid levels. And Ashok, you obviously have to look at from that holistic view and continue striving towards improving the trading industry. So I think you've both got your work cut out for you. So thank you so much for your time and experience on this. It's been absolutely informative. Now, I guess the best, what I want to kind of do at the end is can you guys tell me how our audience can kind of find out a bit more about your certain organizations? Milan, where is the best place for people to find out about Netcope?
Yeah, that would be our web pages. At this moment, it's netcope.com, soon magmio.com. You can find more information about our products and tools there. Maybe what I wanted to say that if any of the viewers are, struggling with a decision to, start looking further into FPGAs, or just, have been postponing the decision for a long time because it seems big and scary, I think we can really help there, because it's the same for everyone. We've got many clients who only knew software and didn't know how to grasp the new technology. So we've built a whole tool chain, like a process, step by step, how to onboard the clients and get themselves educated and just familiar with this technology. So I think that's the main thing we can bring to the table, apart from latency, of course.
Yeah, no, I think that's so incredible. I mean, it's something we've been talking about throughout the whole conversation, is mitigating that risk, and to be able to have someone that can take people through that is absolutely imperative. And Ashok, to the same to you, as where can people find out more about what you're working on over at Saxo Bank?
Okay, just very simple. Just go to home.saxo, and that's the starting portal. You can onboard yourself. You can open a demo account. You can see what we serve. Or if you're using a smartphone, go to your store. Just download the app, Saxo Trader, Go, or any of the Saxo apps. And Saxo Trader is for the professional. And just download, open an account, and trade. And more than happy for any feedback too.
Perfect. Well, guys, thank you so much for both your expertise, and I hope you've had a great time as well. I know I have. And also to our viewers as well, thank you for watching. You can catch the rest of the series and much more over at www.fintech.com, of course, and of course YouTube and LinkedIn, where I'll see you in the comments. And so to everyone, thank you very much and goodbye.